Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at a topic that's been quite one of hot debate in the past week or so, and of course we're talking about the national budget for fiscal 2020 or FY 2020. Now, lots of goodies would have been announced in terms of wage increases and other issues like that, but we're going to look at what's in it for investors today, so let's get straight into it. And for the fiscal year 2020, revenues are expected to be just around $47.75 billion, which is roughly in line with the initial estimates for fiscal 2019, the year that had gone by, the year that has just concluded, of around $47.5 billion. Now, important to note, estimated revenues after the initial projections for fiscal 2019 did come in around just about $1 billion lower at around $46.5 billion. And also expenditures were less than expected for fiscal 2019, falling from about the initial projection of $52 billion to just around $50.5 billion. For 2020, it's projected, or fiscal 2020, it's projected that expenditures will increase by roughly 5% to around $53 billion. What does that mean? Overall, we're still going to be spending more than we're earning, and that fiscal gap is expected to widen from the fiscal 2019 level of $3.95 billion to just around $5.3 billion, or a widening from about 2.4% of GDP to just about 3.1% of GDP. Now, as we are all well aware, spending more than you're earning on a consistent basis is not sustainable, so let's hope that the budget will be balanced in short order. In terms of the revenue breakdown, where are these revenues going to come from? Well, roughly $16.2 billion, or just around 36% of total expected revenues for fiscal 2020 are anticipated to come from energy revenues, and non-energy revenues are going to be fairly flat at around $30.6 billion for fiscal 2020 in comparison to fiscal 2019. That's a small increase in the energy revenue from 14.1 to 16.2 billion. And in terms of non-energy revenues, fairly flat, a marginal decline actually from 31.4 to 30.6. Capital revenues, not too much to talk about, just a shade under 1 billion expected there. On the expenditure side, well, no surprises here. Most of the expenditure is going to be focused on recurrent expenditure, just around 47.7 billion. The majority of that, and typically just around 55% of the national expenditure is spent on transfers and subsidies, with just around 25% on wages and salaries as well. 5.3 billion expected in capital expenditure. That was the case in terms of projections in the last fiscal year. However, capital expenditures fell short of projections, just coming in at just around, or it's estimated to end the fiscal 2019 year, 3.6 billion. So will that be a recurring theme in terms of a shortfall in terms of capital expenditure, or will there be a sincere ramp up in terms of capital expenditure as we head into fiscal 2020? Only time will tell. As mentioned, total expenditures are going to increase from around 50.5 billion by just about 5% to 53 billion. Overall, as mentioned, that fiscal gap is going to widen from 3.9 billion to just about 5.3 billion. The Minister of Finance mentioned that their preferred sources of funding would be non-debt creating sources of funding. However, most of the initiatives announced, which translate into investor opportunities, did come by way of bond financing or bond type financing. And of course, we just summarized very quickly, the housing bond, which has been touted since fiscal 2019, seems very much on the cards for fiscal 2020. Just a reminder to investors that a coupon of 4.5% with a tenure of 5 years and just about $1 billion is going to be issued, with a preference to individuals at the last time of mention. NIF2 was also mentioned, as was the case in fiscal 2019. No news in terms of coupon and tenor, but just about at least $1.3 billion is going to be issued, given that about $2.6 billion value of assets is being allocated at a minimum towards collateralizing NIF2. In terms of the VAT bonds announced to settle arrears, 1.5% coupon for 5 years, and a issuance of about $3 billion in bonds. Now, at prevailing market interest rates, that would translate into a market value of these bonds of between 85 to about 92 cents on the dollar. So these bonds would be trading at more than likely a discount upon issuance. And finally, the THA bond, well, no news in terms of coupon and tenor, but just about 300 or a maximum of $300 million could be issued. So certainly some opportunities there for investors on the fixed income side. Now, how will some of the other initiatives play out in terms of increased wages, the increased minimum wage from $15 to $17.50, as well as increases in the wages of CPEP and other lower income households? Well, that should translate into increased disposable income and spending power. How that affects capital markets in the fast-moving consumer goods sector, as well as some of the other sectors on the Trinidad and Tobago Stock Exchange remains to be seen. So certainly hoping for some pickup in economic activity as we head into fiscal 2020. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.